We're here with one of our favorite guests, Gerrit Fuelling. What's fueling Gerrit? It's been about 9 months since we had you on, Gerrit. And I recall we actually had you on in 2019, and I was listening to some of those podcasts where you were talking about, $17, $18, being a realistic price for, carbonate and hydroxide. I think you've been proven right, on that.
Welcome back to Rockstock Channel, and thanks for checking in. Before we launch into the interview, we'd like to thank all our Patreon sponsors. And for those of you who are new, share a bit about us. RK Equity is an advisory firm run by Rodney Hooper and me, Howard Klein. We are exclusively focused on raising awareness about companies producing or developing the next generation critical raw materials that are powering Tesla's EV battery energy transition. Please register your email at rkequity.com and follow Rodney and me on LinkedIn and Twitter. Please also subscribe to this channel, Rockstock Channel, on YouTube. Please note, Rodney and me are not financial advisors or broker-dealers. Nothing you hear in this video is investment advice. Please do your own research and read the disclaimer at the end of this video or on our website.
Just remind everybody, who you are, your background, what have you been up to the last, few months, and then Rodney and I will ask a few more questions.
Normally, I regularly advise users, either cathode producers, OEMs, or communities and industrial parks on lithium projects.
The profitability, if you look at incumbents, the higher prices, the cash flows are just not moving yet. They're sort of going in the right direction, but not moving yet. The market is already tight. You're seeing battery grade chemical prices in China. I think we've got hydroxide based off the price assessments, I think about 18,700 a ton, but contract prices are lagging. When are we going to see contract prices improve and we're going to see the financials and free cash flows of the incumbents get better?
As soon as the contracts expire, the incumbents who have longer term contracts should be able to rise the prices. The issue, I think, in the last 2 years with pricing has been that the people like SQM or Albemarle reduced prices without need. So if they would have kept their price levels and sacrificed a little bit of volume, I think they would still have had the same margins. So and when the market comes back, you start from a higher volume. So when you make 150,000 tons in total and you sacrifice 20,000 tons, but don't reduce your price by like SPM did, basically 20-30% or whatsoever, then it's better to stay to sacrifice volume and keep the price. That was always the Rockwood philosophy. Contracts, I think, as far as I remember, will expire end of this year, early next year. Albemarle's longest contracts, I think, have been 5 years, maybe some a little bit longer, but when they started this in 2016, so they should be through with this first long-term contracts by end of this year. The situation today is different because when they started the long-term contracts, Luke Kissam was pushing for long-term contracts in order to justify the investments for his shareholders. I think when they took over Albemarle, when Albemarle took over Rockwood, they didn't realize that they have to keep investing $1 billion a year in order to expand capacity for a growing market. I would guess that latest in the first quarter next year, you will see much higher prices.
Okay, and Gerrit, so if you look at what the forecasts are for Livent and so on, I think their guidance is 55 to 70 million EBITDA on a 3.5 billion market cap. So the cash flows just aren't there to justify the reinvestment. So the question is, when they reset their prices, are they going to be getting, do you think, around spot, or, how's that going to play out? And do you think it's realistic when you see a lot of junior commentary and analyst commentary around what prices people will get? Can a junior and can even the incumbents expect to get where spot is now, or is that a completely unrealistic number?
If the market's short, why should it be unrealistic? Look, you go to the customer and tell them, you want me to keep expanding. And for this expansion, I need cash. And if I don't have the margins, I can't expand. So this is a deal, yeah. And
Well,
it's pretty
I mean, Gerrit,
straightforward.
you
So
see,
I would not mind if I would run the thing. I would go there and tell the guy, okay, it was $8 yesterday or $9, and today it's for the next contract. Maybe you can make a yearly contract and blanket order and like we did in the past, and then fix it and would ask for $14 or $15. So what's the point? And because you need this margin, this is really explainable. You need these margins in order to get ahead with your expansions.
but if you look, I agree in terms of this is the question I'm raising is where are the free cash flows for organic growth within companies? But you're seeing share prices at lofty levels and cheap debt, and people are growing without the cash flows arriving. It's on the basis that they will arrive. Is that a reasonable thing to be doing now?
I think so. You have two scenarios there. You need the cash not only for expansion, but you need also the cash for enhancing or improving quality assurance. So currently, as far as I heard, the raw material suppliers say, we have only this amount, let's say 20,000 to 30,000 X thousand metric tons of supply, take it or leave it, and if you don't take it, someone else will do. On the other hand, if you know that you are supplying a critical industry, you need to deliver a product which is what I say, not battery grade, quality grade, but which is fit for purpose.
Just picking up on the margins, Albemarle a few years ago and the high prices was achieving low 40s EBITDA margins on their lithium business, and they talked to the market and told the market that that is their long-term objective. In the past few years, they've been in the low 30s. They continue to be low to mid 30s. They continue to be in the low to mid 30s. But do you see with the higher prices for lithium and the subsequent price negotiations that Albemarle should again be able to achieve low 40s margins, or should we be thinking long-term, in the low to mid 30s?
No, I think if they want to keep their market position, if they want to keep expanding at the pace they have been doing in the last years, maybe with the exception of the slowdown last year or the last 2 years, then I think they have to target prices which allow margins of mid 40s, no? 45. Otherwise, how do you go to finance this?
Costs both on a capex and an opex, at Kemerton in Australia keep going up, labor shortages, and the like. So the price needs to get higher and higher for them to have those margins, right, as costs are going up.
Yeah, but you were suggesting that if they could go to current spot pricing. And my answer was, long term, I see prices of, you said 17 to 18, 19. I mean, in the shorter run, maybe you start with 13 to 15 instead of being below 10. That would be a first step. So
I guess the only thing on that period is yes, for some producers, but when I go through the financials with a fine-tooth comb, 13 to 15 is not going to do it for some of the incumbents, for the more expensive ones.
This is true. If we take the spodumene pricing required to operate a mine profitable, if you're not included, and you end up with $800-900 or maybe $1,000 per ton of spodumene concentrate, then I think I made a calculation very rough over the thumb. So you add 800, so that's 560 for the raw material and spodumene. Then you add OPEX 250 and 13% SG&A, 5% interest on 700 million. So you end up with $10-11 in cost. And then you need at least a 20% EBIT margin. So your price should be in the range of $13 to $15 as a minimum. And if it's higher and if your costs are higher, then you need a higher price of 18, 19. So over the long run.
Yeah, just in some of the more expensive operators, that seems to be the case. So if we were to say, what's the real incentive price, you're still comfortable that 17, 18 is the number longer term.
Yes.
Yeah.
And what I think many people misunderstand is they talk about OPEX and say that's 250 or 240 or 230 or 270. What they consider OPEX is not the driver. The main driver for cost is the yield of the plant. That's the driver of the cost. And if it's a big difference if you can operate a conversion facility at 85 or 90%, or as in some cases, even in China, you only operate at 70. Just
for the listeners, just explain just quickly what you mean by yield.
If you want to make 20,000 tons of lithium carbonate, you need around 120, 140,000 tons of spodumene, and you convert it. And you don't get, if this 120,000 tons, for example, of concentrate contain divided by 6, that's 20,000 tons of LCEs. It doesn't come. These 20,000 tons don't come out of the converter, but maybe only 15,000 tons come out.
Yeah, so
it's a loss in during the production.
Yeah, so we estimate about 8 tons are needed per LCE. That's 6.9. Take about a 15% haircut, but even then, what you're saying is it can be worse than that.
Yeah.
And the causes of that, so people give them a sense.
The main reason is that fluctuations in the consistency. If the spodumene concentrate is not consistent, it's fluctuating in grain size distribution, it's fluctuating in chemical composition. It creates issues in the conversion process. So it's on the paper it looks simple, but it needs a lot of experience to keep it stable and to operate it smooth. Otherwise, you have impurity breakthroughs, you have clogging, you have in particular scaling in the plant and things like this. So this all reduces the productivity of a plant.
Yeah, I mean, I've heard of instances shutting down the kiln like every 3 weeks and having to clean it out and so on. So can make a big difference.
Yeah, cleaning and if you have higher mica contents, it's an issue. If you have fluctuating chemistry, then scaling can be an issue. So a conversion facility needs, even if you make brine, needs with the scaling, you need maybe every 4 weeks, just a number. You need an acid wash to reduce or to get rid of the scalings.
Okay, so translating that back
instead of 4 weeks, if you have it instead of 4 weeks, you have it in every 2 weeks. You run for a week. It's a week-long operation. Sometimes then you reduce your output.
So just to translate that back to what you said earlier, if someone has a significantly lower yield than spodumene is $800 or $1,000 a ton, and you need an extra kilo, that's $1.80 to $1 effectively. That's your point, is it's not all about how cheaply you do it.
No.
Great.
So you need good quality.
Spodumene matters. You need consistent material.
Yes.
Gerrit, you're saying basically $17 to $18 is your long-term incentive price, and you say you don't advise so much, junior miners too much, but more so the users, the cathodes, the OEMs, battery, and auto. As you speak to these end users, have they understood this $17 to $18 and are like, when Albemarle negotiates with them, they're gonna be like, okay, I get it now. This is the price I need to give, or are they still not, understanding this?
I think from the past, I don't know what the negotiations these days are, but in the past they argued your cost is not 10, your cost is 5. If you have 10, you have already enough margin. Huh? So that's the approach very often. Because the incentive price is 18, 17, 18 is not for Albemarle or SQM, it's for incumbents or newcomers.
Right. Okay. But why shouldn't Albemarle and SQM and the like, get the full value of, the alternative price? Well, why do they deserve to, give up that margin?
This is a question you have to ask Eric Norris, Kent Masters, and the guys from SQM or Graves. I don't understand this because we never had the thinking. Huh? So this is probably a matter of pricing theories and how to develop prices and things like that.
Okay, but if you're sitting in GM shoes or any of these other groups that have Stellantis, that they're saying, hey, we're going to get, from the Salton Sea geothermal, we're going to solve our lithium problems. But they didn't announce any, major investments or offtake, terms. I still, your $17 to $18 is still higher than even the increasingly bullish analysts that have come out, Canaccord, Macquarie, Evercore, JP Morgan have all recently put out very bullish notes, kind of agreeing with you and Rodney, for the past year or 2 years. They've brought forward, their deficit numbers, but still their prices, they're not willing to kind of stick their neck out and say 17, 18. They basically say supply is going to come on stream and it'll kind of long-term settle 14, 15, 16.
When you move the demand line to the right on the industry cost curve, you have to have or put in place higher or lower grade resources like lepidolite and those things. And these things have inherent higher costs. So in the past, we said, if spodumene conversion cost you maybe $5, $6, $7, then lepidolite would be around 10. But costs have been increasing, so then you may see some period where the price is going to be 13 to 15 maybe. But then you will need later to bring additional projects on stream. We will see increased prices.
I want to share a couple of slides here. This is from Pilbara Minerals presentation and shows over here Chinese spodumene converters, as of 2012, basically 8 facilities in operations. So that includes Ganfeng, General Lithium. As of 2020, there are 20 facilities in operation and 15 additional facilities at various stages of construction. So again, it includes a number of expansions at Ganfeng. It includes, Albemarle, Tangxi, and a number of others. And I just saw, and I shared with you a news article about a Chinese iron ore miner, basically saying they're going to develop a 20,000 ton lithium hydroxide plant, and the cost is only going to be $164 million. And if you compare that to what SQM and Wesfarmers, for 50,000 tons, it's going to cost 1.4 billion, and the cost overruns, at Tangxi, Kwinana, and the cost overruns, at Kemerton. How do the Pilbara is obviously arguing we're a swing supplier, we have lots of spodumene, look at all these additional new customers that we could sell into. The leverage is coming back to the spodumene supplier. The capital intensity is so low in China to convert spodumene relative to elsewhere. If there weren't geopolitical considerations, if there wasn't, sustainability, because a lot of this is coal-fired considerations, you'd build everything in China. What do you think of that? And I'm going to share another slide from Piedmont Lithium's presentation, which shows all of the conversion currently in the world in China. They show Western Australian hard rock, some of which will have downstream. You have North America, so this is Quebec, Ontario, and North Carolina, where you have hard rock and conversion plan. Then you have South America, AMG and Sigma, a number of plays in Africa, a few plays in Europe. And Pilbara and some of these Western Australian ones, can export not just to China, but to other locations. But again, the capital intensity is so incredibly low in China relative to everywhere else in the world. How do you see this playing out, you know, in terms of where things are developed?
I think my reality is that during the next 3-4 years, materials will have to come out of China because there is no other converter. It's as simple as it is. And but medium to long term, we see movements in Europe that merchant converters are or that there are companies trying to set up merchant converters, and in the US it's similar. So in the US you have Piedmont moving, and in Europe I think Levista is on the screen of some companies. Then in Russia, that's still on the European side. Helmac is doing a conversion plant. Caliber is basically, as far as I got it, starting with a conversion plant only and not developing the mine in the first run. But I'm not sure about this here. AMG is establishing a lithium hydroxide purification facility as a first step in Europe, and may add a converter maybe in Brazil. And I think medium term, Sigma has a similar plan. So yes, China will certainly be in the driver's seat. Not everybody building plants in China, conversion plants in China, will qualify. So Ganfeng certainly yes, Tianqi yes, Yahua we have, and General Lithium, but that's it more or less.
China has about 75% of cathode conversion capacity, and if you look at benchmarks, rollouts going forward, yes, we're seeing plants building in Europe and elsewhere, but it looks as if that 75 is set to go higher. So in the end, regardless of where you produce the lithium, there's a high chance you're going to be sending it to China one way or the other. What's going to break that stranglehold? Are we going to see a material investment into back integration once the US has cell plants? Will we see more in Europe? I mean, what's going to turn the tide on that? Because at the moment, it looks like it's China with a bit. And also the other thing is, who is going to be able to produce LFP cathode at a competitive price outside of China?
So first of all, you will need, all these converters need spodumene. And if they don't get the spodumene, they're not converting anything. So, and for the cathode is similar. You have 2, 3, we mentioned this earlier. Umicore is setting up a cathode facility in Poland. They have ample land, so they can build, I don't know, maybe 80, 100,000 or something more tons of cathode there. BASF is building a plant in Germany, and EcoPro as well. And we see movements from Johnson Matthey in other locations, and I think we will see cathode plants in the US as well, as soon as there is a market for cells. But it takes a bit of time. So the Chinese are quick in establishing plants, but I think from geopolitics viewpoint, that European or American suppliers will ask for at least some share to be produced in their home yard.
We think that's fair, and I guess spodumene concentrate is the quickest route to supply. And if you look at what's going on in Oz, you've got Greenbushes that's spoken for, you've got Wodgina that's spoken for. They said they're going to use it on their own. We have the US as the fastest demand growth rate in the world. We think it's going to go from 20 gigawatt hours to 600 in 2030, given subsidies and uptake in EV. So as a growth rate, it's the fastest. And if you're saying they'll want some cathode supply domestically, it makes sense to have then the raw materials. Do you think Canada can be the next frontier?
Yeah, certainly. The Canadian ores are historically, the spodumene has been mined in Canada. Tanco belonged to, which is now in Chinese hands, has been mined for technical grades. That's Lake Burnick in Manitoba. So they have been mining technical grade spodumene for a long time. Then you had Canada Lithium in the 60s. you've now new resources like critical elements, frontier. So there are a lot of pegmatites which can be developed, and they have a good quality ore. So it's most of those things are have a relatively low impurity profile. So they should be workable.
Do you think it's advantageous if a project is a DMS only, so it doesn't involve any flotation, you just crush and backfill?
If this is, but this depends on ore. If this is possible, it's easier. If you have flotation, you have to add processing steps. So
yes, and I'm saying from a permitting as well, if you're negotiating with various parties, if you're saying, look, I'm not doing flotation, I'm just doing DMS.
Permitting, sorry to interrupt. Permitting, I meant the conversion plant. So
yes, okay, so okay,
that's the major issue, because when you if you apply an acidic process, for example, like the Australians or the Chinese, basically this is, you won't get any permits in Europe for this. At least not in Germany, and the European permitting, the environmental laws are pretty similar everywhere, or the same. You will have issues. So if you plan an acidic process here in Germany, it's a no-go.
So are you saying Metso Outotec is the way to go?
Yes, it's a way to go. Still, it's not that simple to get rid of your tailings and byproducts. Yeah, it's maybe a bit easier, but for the other processes, probably I'm not saying it's impossible, but it's very, very difficult.
We dig a little bit deeper into that, because this whole thing about acid, Tesla just put out their sustainability report, and they reiterated what they said last year, is that they don't like acid, right? And they don't like the sulfate free, and acid free when they're looking at, both their hard rock as well as, their clay patent. But Metso Outotec I'm not an expert here at all, but it's an alkaline leach process. Critical Elements has tested that. Calibre is using that. Piedmont is using that. Holmec is using that. It seems to be where the direction is going in the future. I understood from you that actually this same alkaline leach process is what Canada Lithium used, in the 50s and 60s. So it's not actually that new a process, but in Western Australia, like Kemerton's not using that, Kwinana's not using that. They're using acidic processes. I don't know if you know what SQM and Wesfarmers are using. This isn't what, they use the acidic process in China. So help us understand this, I guess, alkaline leach, Metso Outotec, and why that's how it's going to work, in Europe, and the US. And might it also be the way that Australia, and China go in time?
If you have your converter next to your mine, then and you can backfill the tailings, probably you have a different situation. But in Europe, we don't have any. We may have a converter, but we don't have any, for the time being, any feasible mine. So Infinity, it's close to a big city, 2 kilometers. It's hard to believe that they will get a permit to operate. And the only mine you could think of, the 2 mines, is Zinnwald, Deutsche Lithium, Zinnwald, Lithium, and European Metal Holdings, which operate a different, which have to operate a different process because it's a different ore. It's Zinnwald called. These guys can basically backfill, and the moment you can backfill and you have close to a mine, at least in Europe, if that's the case, then you have solved maybe 60 to 70% of your waste disposal problems. So and I don't know the situation or the environmental regulations in Australia, but basically if you have an operation in Kwinana or Kemerton, you can use the tailings and backfill into the open pit you have opened.
As I understand it, that they have to ship back the waste back to the mine. So I mean, it's traveling 100 to 200 miles or kilometers. But then after the process, it's an extra cost. to them, but they are able to ship it back. But you're saying in Europe, and certain places in US and Canada where space and populations are more dense, that you need a process that has less tailings and less tailings that are toxic.
And when the tailings are acidic and you make use of groundwater for tap water like we do in Europe, or at least in Germany, then it's an issue, yeah. So aside from this, you have to dispose. If you make 20,000 tons of carbonate or hydroxide, you have in the range of 20,000 tons of sodium sulfate. So what to do with that? I'm not sure whether there's a real market. When you Google it, it's 1 million tons market or more, but I think it's in some areas still used for washing powders or so, but I'm not sure about this, whether you can really get to dispose it in such an industry. Yeah, and sodium sulfate is highly soluble, so you have to it's a bit of a nightmare to dispose it if you have to, and if you have an outlet. In China, I'm not sure. At the moment, everybody is dumping it in their backyard, but on the long run, I wonder how the authorities in Jiangxi, where Albemarle and Ganfeng are operating, going to treat these tailings. It's a big operation, and the tailing mountains get higher and higher.
So you see a long-term issue with all of these sulfuric acid roast projects that are ramping up. I mean, again, these are Albemarle at Kemerton is talking about going to like 100,000 using that process.
I'm not seeing Kemerton, but Kemerton can backfill, so they just transport it back to Greenbushes. Yeah, but in China, I wonder how they. It's not in all cases, so you may have special dumps where you can do this. So we could think about a waste dump, tailings dump here in Germany, but it's hard to get approved, and it's close to impossible. But if you go for it, maybe 5, 6, 7 years, if it meets resistance from the local community, it will be difficult. In China, it might be different because the government can say, okay, here's a location, and if you do it right, you can put your tailings there. I'm not sure how this is going to develop, because in China things can happen very quick, like with the rare earth when they mined it in Mongolia, Inner Mongolia, and whole areas were contaminated with thorium, and suddenly in 2000, also to punish the Japanese maybe, they consolidated these operations and imposed stricter environmental rules. So this is something which might happen.
Gerrit, your thoughts on what the potential impact, short and long term, is of all the political risk and the financial risk in South America at the moment, all the threats and so on? I live in Africa. Every time we have a commodity boom, everyone wants to come out and tax it and do something to it. How do you perceive the risk in South America?
So the Chileans, I think, have moved with their schemes on royalties and taxations for Albemarle and SQM, which sees a larger portion of profits moving to the tax coffers of the governments. In Argentina, it depends. So they always impose an export tax and then reduce it again. This is probably more difficult to plan. But I mean, Livent's been operating there since the 90s. You can do, yeah. So I think the projects will move on, at least the existing ones.
A question related to that is, what quality and price do you sell exported from Argentina or Chile, right? Because Orocobre is looking to sell a lower quality and convert it elsewhere, so the margin will be elsewhere. Likewise, Galaxy at Sal de Vida has suggested that, and to some extent, Livent, as we understand, transfer pricing, it's not like they're producing super high quality carbonate, and then exporting it. And then when you look at SQM is not focused on quality at all. They just were focused on volume and price. To some extent, that's, they're incentivized to do that by the royalty regime, and also their concession only goes to 2030, and they were given like a certain number of, the volume of tons, to produce there, but they don't seem very focused on producing high quality in South America, and exporting it at a high price. They're letting the value, be elsewhere. The only company that seems to be, pursuing that, is Ganfeng and Lithium Americas. They say that they're going to produce, the high battery grade, in Argentina. But like I have the same, concern, as Rodney. If you have super profits, if you have 40-50% margins, and your countries where there's there's not a lot of export earnings, and you say, well, those are super profits, we're just going to, take that. So I guess, what do you think about that? One, in terms of the strategies of the various companies, and the likelihood that the high taxes will come, if they're super profits?
I think in Chile, we never were afraid of the taxes and the royalties we have to pay. I think the decision for whether you export a higher or lower grade is depending on what you do with the material. So Livent is basically only selling lithium hydroxide. They said they would like to sell a bit more carbonate into certain markets. But if you convert everything into hydroxides, there is a purification step outside. So you don't have technically the need to go for a so-called battery grade product. And the same is the case for Orocobre, because they're building with Toyota Tsusho the conversion, the carbonate hydroxide conversion facility in Japan. And the same is the case in a bit for SQM, who is selling carbonate into hydroxides, carbonate hydroxide conversions into China. And Orocobre is a little bit difficult, because when they started, I don't know, 12, 13 years almost ago, to build a carbonate plant in Argentina, they basically made design errors. So they believe they can, they forgot that lithium bicarbonate precipitates at 4,000 meters altitude. In that case, you don't get a battery. So you need a different process. You need basically a recrystallization, which is more difficult to do in 4,000 meters than it is in La Negra at 500 or 600 meters. So there are a lot of technical issues you have to think about when operating in high altitudes. And as far as I understand, the Three Quebradas, this is Neolithium in Argentina. They are planning the conversion plant not at the place of the Salar, but down at, I don't know, 1,000 meters or 1,500 meters altitude. So in that case, you can easily add a big crystallization step and obtain a higher purity material. So it's more, in my opinion, in many cases, not driven by taxation, but more by technical requirements or technical capabilities.
Very interested to see Ganfeng, and Lithium America's technical capabilities, with that project commissioning, next year, 0 to 40,000 tons. They are doing the conversion, not at the low altitude. So I'm sure they've learned from Oracobre's mistakes.
You can do it at a high altitude, but you need a different type of equipment. It's not rocket science. But the reason Ganfeng is doing this is because they have a market for this carbonate as well. Yeah? So they have the hydroxide production from spodumene in China, and now they make the carbonate maybe for their LFP production.